closing down the show. I've seen the main act. I've seen it come and go. This is the payback. You ain't gonna bring me down. Ain't gonna use me.
All right, good morning. It's 8 o'clock in the morning, New York time.
Don't you come and cry.
Somehow I feel like a cocktail and a cigar.
Don't you come and
But we got coffee and pips. How about that? Yeah, coffee and pips. That's excellent. So, hey, welcome to Forex.Today, the YouTube channel of more than 18,000, almost 19,000 foreign exchange traders stationed around the world where we're synchronizing our watches. Yeah, baby. Coordinating the satellites, planning our attacks. We're gathering intelligence to formulate strategies and then kicking down doors with proper tactics. Ask questions, get involved. But more important, let's go. So let me remind you that trading is risky and it's not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please always stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Ni hao ma. Hey, good to see you. Welcome to my office here in Atlanta. Today we'll conduct technical and fundamental analysis with the overriding goal of helping you put together trade plans throughout this beautiful New York trading session. Speaking about New York, it seems that there will be about 8 people gathering at the Harvard Club on Friday. Cool, that's just perfect because I have reservation for 8 at the Carnegie Club as well for cocktails and cigars after. So let me buy you some roasted cauliflower tacos on the rooftop of Harvard, and then we'll go out and have some good time. So cool. So it'll be great to see everybody. One of the people joining us is a member of FX Bootcamp going back, I don't know, 12, 13 years. So it'd be great to see how he's doing. He's the guy I got on Bloomberg television. They're like, hey, do you know any retail Forex traders? Yeah. And they're like, do you know anyone near New York City? Yeah. Can we go interview them? Okay, I'll make a call. So anyways, I got him on Bloomberg television. So thank you for being here. Thank you for being part of the community. Thank you for your positive energy, the hard work you do, the great questions, your inquisitiveness, your curiosity, and your beautiful smile. Thank you for all your wonderful contributions to this amazing community. Take notes. And you might find that one day they'll be helpful because I've been doing this almost 20 years and well, it still hasn't gotten easy. You still have to make wise decisions. But the best way to do that is learn from your past. And since we forget about 99% of everything, I would recommend taking notes so that we can remember it. So I have a saying, if you can't remember it, then it never happened. So do your best to remember it. I'd like to thank Traders Way for being mighty fine foreign exchange broker. They have fast execution speed. That's good. They have narrow spreads. That's good. They have huge swaps. That's amazing. They have world-class customer service. That's cool. Now, a lot of brokers might claim to have all that stuff. And you're like, okay, so how do you choose? Like, do you like navel oranges, or do you like this other kind? I guess, I don't know much about oranges. But anyways, I've gone apple picking, and there's like 20 different types of apples. So you're like, is this apple I like? Or do you like this apple? Or you're like, how do you, like, ultimately, if all the brokers say, oh, we're cheaper, we're faster, we're better, which one do you choose? And it's the one that earns your loyalty and respect. And Trader's Way has earned my loyalty and respect. And so maybe that'll help you make an informed decision. Visit Trader's Way, open a demo, download their platform, and practice, whether it takes you a week, a month, or a year. But when you develop the confidence and skills that you need to trade real money, maybe you'll say, you know what? I already trust Trader's Way. They've earned my loyalty and respect. I'll give them a shot. Boom. Now you have an execution partner for your new successful Forex trading business. How does that smell? Huh? What do you stink? All right, so here we are in the world. It's the world of the end as we know it. All right, let's take a look. Dollar's still strong. Yen is given. Nice. Swissy, wow. Okay, definitely a dollar flow here. Definitely a dollar flow. This is interesting. It may not be global macro. It might be Fed directly related. So we'll have to pay attention to that. What I would like to see in the next 3 weeks is the opposite, but I don't know. CAD doing aight. Kiwi rebounding. Aussie doing what it can. Pound has been strong for a week or so, and maybe some profit taking. We'll have to take a look. And Euro El Succo. And that's largely due to this, in my opinion. Okay? Euro's down because dollar's up. Okay, that's all. All right, cool. So let's go exploring. You want to explore with me? Let's start with the commodities. Let's do gold, oil, and Bitcoin. Gold. Now, let's do oil. Oil. All right, oil. Arr, okay. We're still playing the same stink. Okay. We've marked this out long ago. And we said this is probably going to be important. Okay. So now, if you were asking the world, dear world, would you please give me a pullback so I can slingshot? Do you guys remember the story from yesterday where I talked about my days at NASA? Not like I was slingshotting satellites around Saturn, but anyways, I did interesting things at NASA, just not that. But the idea of a slingshot using the energy, in this case, bulls want to use the energy of the bears. So if you remember that, it means get ready. If you're a bull, you want to buy at support as long as it's a higher low. So you got what you asked for. And remember, I described this as bears are going to sell here. Do you remember that? Like, if you don't understand that, then you don't understand where bulls and bears buy and sell. So we had this, like, this is where bears will sell. And if you're a bull, that's why you wouldn't buy high, but you would buy low. So where would you buy? Okay. And 67 seems pretty reasonable. And now you start on smaller time frames looking for your up. Does anybody remember that? Is anybody here? Is anybody alive? Kind of feel like I'm all alone somehow. I'm lonely. Nobody remembers that? Never happened, huh? So we'll call that 70. Yeah, okay, good. I just wasn't sure how bad the lag was. All right, so what do you stink? So I'm trying to fit this in there, like you got this idea like this. This is your idea. It's a hypothesis. And I used a psych level and a pivot, but you might just want to use a Fibonacci and you'll say, yeah, right around 66, 65. Oh my God, that's the bottom of the candle. But anyways, right around there could be your buy. Goodbye, right? Is this your goodbye? Okay. The next thing to watch is where bears are going to challenge you. Bears are going to sell up here, right? Here or here. So you know that that's likely to happen. Now, the interesting part is if it don't happen or if it does something like this. Okay? And you must understand that if you get something like this, it's significantly better than this. Okay? Because you're buying a higher low after the higher high, and it's not just a higher high, but after the bounce on the 618. And it's not just a 618, it's the fact that you believe on the higher time frame we are in the process of creating a reversal. Okay? The question here is, but won't oil go down due to the called out increase in supply that I talked about yesterday? Well, here's the thing. It's an if-then statement. If we ultimately believe we don't know the future, and that's what I'm trying to teach you. There's one thing about having a hypothesis and a bias, and there's another thing that you have some level of certainty. When I say hypotheses, using scientific methodology, you have to have data to confirm or deny the hypotheses, which is different than having certainty. If you have certainty, there's no need to test, right? So I would say you could be bearish if you believe there's going to be an increased level of supply. Okay, that would indicate the hypotheses of oil prices should come down. Someone else might say, well, demand is likely increasing as well, and therefore supply and demand might meet at a different equilibrium, and it's already fallen like $10 or $12, right? So maybe now is the right price. So it always comes down to, first of all, your bias. Which one do you want to trade? Are you a bull or a bear? Then the second part of this is at what price? What price would a bull buy? And you build on that now as the hypotheses. So if you're like, well, I'm a bull, so maybe around here, which we identified as a buy zone off of a previous low, which we identified as support, then you say, well, all right, bringing this all together, it's like cooking a recipe, right? We got everything chopped up now, let's bring it all together. So if that earlier support is support, and we want to buy a higher low, that we've identified at around 67, specifically 66.75, okay? So if that old support, which is way left, if that's actual support and we want to buy a higher low at or near 66.75, okay, then we must observe a reversal pattern in here. And if you get that right, you probably not lose money. Now, you could buy it and then it collapses and you'll probably break even. Or if you lose money, you won't lose a lot of money because you have a stop. But you're breaking this down into digestible pieces. Okay? So again, if this is truly support, okay, at 65.5, and at 65.5, you said, oh, right, that's it. That's my price. Now I need the higher high. And then you get it. Then you say, oh, great, now I need the higher low. Where do you think the higher low would be? Well, that 618 looks really nice. So now you need to be in sort of monster mash mode, right? You need to be using tactics now. Your strategy, irrelevant now. You're already in front of the door. kick it down and put ammunition into the bad guy, but don't put ammunition into the good guys. Right? Oh, well, I don't feel good about this one, Sarge. No, please. Come on. Okay? Now it's tactics, guys. You're either, right? But you're not making it up along the way and like, oh, I'll try this, I'll try that. If you're putting this type of analysis, now it's time to go to work, right? Now it's time for mommy to go to work. If that don't work, then your second one would be a double bottom. What? And the question is, well, what about the concerns of supply? Well, if you're concerned about that, then you would be selling what bulls are buying, but you're going to sell it high. Okay? A bear has already got the price action because a bear was assuming the same thing a bull was assuming. Because we talked about it yesterday. I gave like 9 reasons why this would create a red candle on a daily. And I said, bulls actually want the red candle. So bears need to do their job to create it. So here's what they did today. You could have sold there. You could have sold there. Okay. You might have sold here. And now what? Your next move, bears, would be probably sell it around 67.5 and take it downtown. Okay. Because I'm just looking at this role reversal. Okay. It's just price action, yo. So if you're like, well, I don't really like the price action idea, I'd like to kind of implement that using Fibonacci, then Fibonacci says something like this, 67.15. So maybe you're selling at 67 and you might sell again at 67.5. That's what a bear would do. That's what the bear would do. What do you stink? Smell like a plan? Okay. William, I'm not going to give you like direct advice on whether you should take profit or not. That's your decision. But here's the way to address that. Trading is fairly easy once you know the basics of technical and fundamental analysis, right? So the next part is you're really a risk manager. And those that do best, okay, can see and therefore address or adjust because of increases of risk. So if you see risk coming, William, it's generally not the right idea to do nothing. I'd rather you be wrong on, taking profit and then nothing happens. And you're like, oh man, I could have just stayed in it, versus doing nothing and then it collapses on you. If you see risk, your job is to manage the risk. Okay? So what does that mean? Do what you think is right. And on the long run, you'll be fine. Okay? You got that? But doing nothing rarely leads to consistent good results. Cool. All right, so here we are, still kind of messing. This is from last week. What we looked at on gold was that we identified this as support and then of course it's pivots and stuff, and a plausible area for a reversal. Again, if it's going to go up, then it'll happen at support, which we have at 1750. So therefore, if you were going to trade the reversal, you're going to look for a reversal pattern here. Did we get that? No. So is there a trade here? No. Am I wrong? No. Because if that happened, that would have been a great trade. So now what's the next level? We covered this yesterday. Okay. We have support here, here, and here. So that did happen. So now what? Well, now it's really tricky because, bears are going to want to sell here. Don't you stink? So what would a bull want to do? A bull would want to buy a dip at 17. So good luck with that. Okay, good luck with that. But let me ask you, do you think there were sell orders here? Or I mean, not sell orders, but stop losses that may have triggered this quote unquote flash crash? And then the equal but opposite question, you see that giant wick? Do you think buyers had buying orders right here to take it up? Okay. Some people got stopped out. Some people limited in. They had a plan. They said, you know what? If gold drops down to this area here, if gold drops to 1700, I'd like to buy it. And then they all got filled as it dropped, almost $25 below 1700. And they all got filled. Look how quickly that occurred. What is this evidence of? Well, first of all, I can't prove it. So I don't know if you want to consider it evidence or not. But some market participants were buyers of gold and they had a trading strategy in advance. And they used orders to say, hey man, I might not be sitting at my computer right now. I might be on the beach. I might be on my jet. Hey, I might be on my rocket ship. But if it drops to 17, I want to own it. Okay. Dave says, hey, are we due for an increase in the price of gold due to seasonality? I'd like to caution you on that logic. Don't look for a trade based on seasonality. It reminds me of long-term capital management that bet billions of dollars that spreads would narrow. That's what the model showed. So they made that trade. And they did it over and over and over and over and over again until they lost tens of billions of dollars. They said the model, like seasonality being a model, right, Dave? The model says this, so I'm going to place these trades. I would never recommend that. So instead, if there was seasonality that I would confirm, I'm not going to confirm or deny that. I'm going to leave it for you, okay? But if it was, it's just sort of the general sort of your openness to look for a reversal from bearishness to bullishness. And then, Dave, you would drop into charts using technical analysis to say, okay, typically, I believe this time of year, because of miners or something, you believe there'll be an increase in price. And therefore, you want to be ready, willing, and able for reversals at support that would benefit from that alpha that you have. Okay? You're a little bit smarter than everybody else because you see the seasonality. So you sit around waiting for the bullishness, and your technical analysis must confirm your seasonality. When you got it, you have first mover advantage. Okay? But it's a fine line where you can start buying because gold should go up. And there's a saying, right? Let's say you're right and the entire market is wrong. The entire market is selling gold, and there's a 90% chance, or not 90% chance, 90% of the time this time of year, it turns bullish. So you're like, what the hell? Everyone's stupid. Everybody's selling gold. What's wrong with them? Don't they understand that 90% of the time it's supposed to go up right now? So why? And you keep buying as it keeps falling. And the saying is the market can stay irrational longer than you can stay liquid. So what you want to say is, hey, there's a good chance because of seasonality, gold should start going up. So you watch gold fall and you just get out of the way, believing that at some point that's going to change. Okay. US CPI, I don't care. Okay. I'm much more focused on the Fed. There's nothing that's going to happen, Cash, on US CPI that will impact the Fed. we already know, first of all, they track PCE, not CPI. We already know there's inflation, and even if the number comes out big, what are they going to say? Oh, it's transitory. So, we're much more interested on the employment side. We're much more interested in wages. We're much more interested in job growth. Okay? Those are the better concerns. Okay? But if you got the number, post it. Okay, good reaction, some dollar weakness. Wow, this is some old school volatility, huh? Nice. Well, mark your lines, guys. Mark your lines. Look at that. This is old school, man. I haven't seen that kind of volatility for a while. Yeah, and if you're not a scalper, then you may not understand that you've already missed it, right? So there's your buy zone, guys. If you're doing a high volatility event driven strategy. Cool. What was the number? That's a nice move. I haven't seen that kind of on the news. That's more than non-farm payrolls. It's beautiful, man. That's cool. Okay. So here's the thing. So I marked this, and did you notice inside that candle, it came down and did that? So you'd already, if you watch the old videos on how to do high volatility event driven strategies, okay, in 3 or 4 minutes, if you haven't moved your stop to break even, you should probably just get out. Yeah, so it's annualized, right? Cool. Nice. So once again, the argument here is we're not going to need to tape. We will need to taper. Sorry. We will need to taper. Okay. Yeah, no, it's a beautiful dollar play here. It's wonderful. Okay. And who benefits from a weak dollar? Okay, these guys? Okay. That's some nice rotation. Let me point this out. Nice rotation. Up, 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 down, down. Up, 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 down, down. Up, 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 down, down. Up, down, down. So what do I want next? Up, up, down, 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 down. Very nice. On says developed countries. I'm saying emerging markets that have to borrow money to expand. And the money they borrow gets cheaper. And even really the money they've already borrowed is cheaper. Cool, right? Cool. Very nice. What a lovely day. Lovely. Yeah. Okay. Biddy priced and dollar should benefit from that. Okay. What was the trade plan for today? The trade plan for today on Bitcoin is buy in here between 45.5 and 45,500 and 45,000. Okay. The new trade plan based on tomorrow's trade plan is buy at 4,500 again. The reason I bring this up is what is that pattern? Up to resistance, down to support, up to new resistance, down to new support. New support being the old resistance. We call that a role reversal. Okay, and now Bitcoin priced in dollar may benefit from the dollar weakening. So because the dollar buys less, you'll need more dollars to buy the same amount of Bitcoin. Not because Bitcoin went up, but just because the dollar went down. Interesting, right? What do you stink? Are we on our way back to 50? Well, that's for you to decide, right? Drop a lot, moveon.com. What else we got going on? Gold. No, we did gold. We just did gold on a different chart. Gold, oil, Natty, Brenty. All right, let's move on. Let's take a look at some dollars. Lovely. Okay, things I like. Okay. It's happening here. Okay, I like that. Okay, I like that. Okay, where will we be challenged? Here. So all this is doing is going up. And as I have taught you, if you didn't buy it at 1,700, then you were not a bull and you didn't consider that support. I swear to you, on Monday we talked about that. 1,700. Okay. So now it's up here. Now you're thinking about maybe buying it. Dude, slow as molasses on a cool Georgia morning. Okay. So the next thing is, where will this move be challenged? It will be challenged here. Great. So if you were now a bull and you weren't a day ago, then now you got to wait for something like this. And that might take a day or two. Cool, man. Yeah, grind. I miss Lira too. That was some. We got some pretty good trades. Okay. I think it's going to be a long time before you could ever make 1,000% internal rate of return on 0 pips. Right? When will we be able to do that again? 1,000% return and making no pips. It was a break-even trade. Wow, right? Turned $100 into $1,000 and I didn't make any pips. Cool. Good trade. All right. Good. So here's the ebb and flow. Okay. Now, if you're trading this up, great, but you have to understand where all the bears are, man. Look at the bears here. So if you are a bull, you're going to try the next wave. So the way I scalp is on high volatility, event-driven strategy type scalps. There's a 1-minute cycle, there's a 5-minute cycle, and very often there's a 15 to a 1 hour cycle. So if you did this on a 1 minute, you're going to do it again on a 5 minute, and then you're going to do it again, let's say on a 1 hour. Okay? Because everybody gets their turn. Or the opposite happens, bears take it down. And they shut it down, right? They shut that rally down. Cool. So this is why it benefits you to have made decisions. So the next sort of fib move here is giving you a sweet spot at this price. But remember, there's more to the world than fibs. You want to look for pivot points. You want to look for psych levels like 38.50. Okay, 38.50 could be a buy here. It's a little higher than that, isn't it? Okay. Okay. Okay, barely came back. It gave you this, maybe. Okay. By the way, I think I'm going to start doing all my webinars at this time of day again. So I'll see you tomorrow at 8 a.m. New York time. And if I can get to the city in time, I just, in my meditation this morning, I thought, you know what? I should make phone calls and see if I can get an office on Wall Street. Wouldn't it be cool? I'd have to wake up super early and go from midtown to downtown. But wouldn't it be cool to like actually do the live stream on Wall Street? I think that'd be cool to try to do it. But, honestly, I'm not sure. Yeah. Yeah. I have a mailbox at 40 Wall Street, and that company, I think, will rent an office, just, like a conference room. So maybe I'll zip over. Live from Wall Street. Yeah. Trump owns the building, by the way. Cash is like, I love New York. Go for it. Yeah, it would be cool. Well, the other part of it is the reason I went to 9 is I wanted to show you that I'm changing my behavior because of an expected change of volume and volatility. You understand that? I'm using that as a teaching tool. And we also know next week is the 3rd week of August when I said, right, the 3rd week when I want to be ready, willing, and able. So changing it back is part of that behavior. Changing it back this week is just, I'm going to be busy while I'm in New York. So I'd like to knock out the streams earlier. So I might as well just change it now. So today, I got my first class ticket on Delta, right? So I'm flying out to the city. That's one reason to do it early, just so it gives me another, I don't know, so I have an hour to pack, I guess. And I don't know how long it takes to get an Uber now. I think it used to take like 6 minutes to get an Uber. I think it takes almost an hour to get an Uber, just for the Uber to show up. Efron says, it seems like Euro is going to take some strength. No, I believe the dollar weakening is going to push the Euro up. Okay? What do you stink? You're like, well, isn't that the same thing? No. I don't think people saw US CPI and said, you know what? I think I want to corner the market on Euro. Euro is basically neutral, right? Did you know in the German bond market, whether you buy an overnight bond, which we call a bill, you can buy an overnight or a 30-year, and they all are negative. And I don't think people sit around and like, you know what I need? A 30-year investment that's guaranteed to not make money. In fact, I want a 30-year investment guaranteed to lose money, right? So I'm like, dude, this is all dollar, my friend. So, right? So, for example, if all the money is going to Europe, not Europe, sorry, Australia, let's say let's say all the money right now went from United States to Australia. So the Aussie would skyrocket and the US dollar would weaken, right? You understand that? And because the dollar's weakening, euro dollar would go up. But I just said 100% of the flow would be flowing to Australia. And in that situation, euro dollar would go up. That's why, like, when you're like, well, I think the euro will get strong. It's not strong at all. Nothing has probably happened to the euro. But the dollar got weak. We know that for sure. Okay? So be careful, right? Sometimes people say, if you eat enough ice cream, the temperature outside will go up. Right? And you got to be careful with that. Okay. So, what do we know? This top predicted this green zone as the bottom of August. I talked about this yesterday. And now, wouldn't it be nice if we started getting upward pressure until the end of the year? And in January, I predicted it would happen Monday. So here it is Wednesday, Monday of next week. So I might be 2.5 days early. But I gave you an 8-month heads up. Okay. So what are you going to do next? Nice, right? Okay. Luis says, hey, Wayne, the Fed is right. Inflation's transitory. Yeah, I know. Why on? Because I said so. There's no other answer. Okay? It's my educated guess. And 20 years of trading experience. But kind of like going back to someone else's question earlier on gold. If you think the third week of August this is going to go up, it doesn't mean you start buying the third week of August. You're ready and willing and able to look for opportunities based on that hypothesis. Yeah, or my ego, right, Grind? Yeah, sure. Okay. Mr. Sangham says, have I talked about the UN climate report? No, I don't care. Let's see. Humans have been bad for the earth. Industrialization is creating pollution and increasing the temperature of the planet. At the same time, we are likely going through the end of an ice age. Remember, an ice age is simply determined by if the planet has any glaciers or not. If you have a glacier on your planet, it's an ice age. Well, we've almost run out of glaciers. Well, that's just global warming. Okay, whatever. Either way, like, what am I going to do about it? Right? I'm going to buy a car that gets 11 miles to the gallon. Now, am I anti-climate and stuff? No, of course not. I love the earth. I love me on the earth. right? But I don't have a strong opinion where I look at the UN climate report and then say, I need to change the way I trade Forex. Johnny's like, and more extreme weather like flooding and stuff. Yeah, fine. I get it. I totally do. I get it. Okay? The world's probably not going to end while I'm alive. I do take responsibility, so I try to do good while I'm here. But ultimately, I need to make money today to put food in my children's mouths. Okay? And the UN climate report's not going to change how I do that. It's not going to change how I make investment decisions. It's not likely to change market participant behavior on the short run, maybe in the long run. But again, that's why in economics, you have to analyze both long and short run. And so, was it an important report? Yeah. Do things look good? No. Is it going to change my behavior as far as being a foreign exchange trader? No. Okay. You know what I mean? Marcus says, what's my opinion on USD Cad? Well, Marcus, what's my opinion on USD? Okay. I'll give you a hint. I told you 18 months ago. I think it was April 16th, 2020. Okay, I have a short bias. Great. Now, I also look at Canadian dollar as representing commodities. So I have WTI set up for a bullish move, and I have gold set up for a bullish move. Canada exports both gold and oil, right, in a big way. So what do you think I think about USD Canadian dollar? What do you think I think? Okay. See, once you know that, Marcus, that I'm short the US dollar and long the Canadian dollar, the rest is easy. The rest is easy. Oh my gourd, is it easy. How many people here use technical analysis? Anybody? Do we have any technicians here? Okay. So you know how to trade using technical analysis, right? So having analyzed what I believe the US dollar is going to do, mostly from monetary policy and economics, okay, and by the major exports of Canada, I've analyzed gold and oil, and I've analyzed the US dollar through central bank monetary policy, and I have now an opinion on direction. So now if you understand technical analysis, my God, what's the problem? You're a technician. So I don't know what algos you use. What statistical tools do you use? Do you look at momentum? Do you look at standard deviation? What is it that you use? I mean, you can use anything you want and make money as long as your general thesis is correct. So one of the tools I have here is standard deviation. I have pivot points going. What do my pivot points tell me? That this is a sell zone and this is a take profit. So I don't have any problems there. I also already identified where I'm going to be challenged in this thesis. You see this? Look, I already did all of this for you guys. Super ridiculously easy, right? So I know I'm only a bear. I know I have a bearish setup. And I know why this is likely to occur. And now, right, I know what my target is. Now the rest is more of a momentum, like price action, for example. And what that'll say is, now that I have a low, I guess lower than this low here, I'm going to sell the next series of green candles, and I'm going to take it down to here. Cool. And what's my target? Some might say, well, you have a problem here. I'll say, well, my bigger problem is at 24, but I'm on my way to 21, maybe 20. So I expect to make 500 pips on this trade, is what Dwayne would say. And if I'm wrong, I'm not going to lose 500 pips, am I? Okay, you see? So Marcus, like one individual trade, irrelevant, right? You're going to make tens of thousands of trades, right? So what's much more important is the reasoning. Okay? Okay? Yes. Yeah, the thought process is much more critical because then we have a basis for understanding. Okay? I can't, it's not about being right or wrong. It's about having logic to your decision-making process so that you know the risk you're taking and why you're taking it, but also, more importantly, you know when you're wrong. And I'm much more interested in you knowing when you're wrong. I think most of the time, if you have good logic behind your trade setups, most of the time you'll make money. Okay? Not because your skill level is so high, but instead you're spending time planning your trades. Like you have a real logical reason. I mean, dude, look at it. A double top on the R2. Right? Hung up on the R1. Okay. So anyways, so if you're a bear, you'll probably make money. Okay. Okay. We could do something fun here. Okay. We could say, this is a terrible place to put a stop loss. Okay. Terrible place, but let's just there. Okay. Anyways, we'll mark that up. Okay? As sort of a basis of observation, okay, stop is 100 pips away. You might say, holy smokes, eh? But the limit is 500 pips away. I could probably have a 250 pip trade or a stop. I could probably have my stop way up here if you want it. As long as there's money in it, right? Johnny's like, admitting you're wrong is one of the hardest things he's going through. And I wonder, we'll have to talk about it over cocktails, eh? But I wonder if your military background has contributed to that. Be interesting to see how the military responds to, a mission not going as planned. You're like, well, sir, I responded with the best information possible, blah, 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 but maybe not a mistake. So I don't know. I don't mean to put words in your mouth and that kind of stuff. But it'd be interesting if there was some truth in it. I don't know. So, I have to put some truth serum into your drink. All right. Look, a little whiskey might make you talk. All right, Johnny, you're gonna sing like a canary. Gluck, 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 gluck. Sing with me, sing for the year, sing for the laughter, sing for the tears. Yeah. Right? Yeah, so I don't know if that's real, but I imagine, the military, it has a culture of never make a mistake. Okay. And, that could be danger zone, right? Flying to the danger zone. So anyways, well, I think I'm going to go soon here. We did some exotics. We did some commodities. Guess we could look at some yens. Right? But I got me a ticket on an aeroplane, so I got to go, yo. Right? Yeah, Highlander's like, never admit to a mistake. Yeah. Hi, Wayne. Old videos are still available. Yeah, there's about 5,000 of them, Joe. Sorry, Joel. Hey, Highlander, were you in the military? You drink wheatgrass, so I assumed you were a hippie. But you got the military haircut, so. Yeah, right on, Marcus. I'm not trying to put you into a trade. I'm trying to teach you the thought process so you can make wise decisions. So, I'm glad it helps. What are your thoughts on gold? I think you should watch the recording. And we covered it earlier, and I covered it yesterday where I think there might be a change in direction in central bank purchases because of a change in the needed change in response to COVID. That runs by. See, I don't trade cross pairs, so okay. It's interesting. Like, I don't think that would be a good trade. So I look at this, Efron, and it doesn't make sense to me. So pound right now is essentially neutral, and I would expect it to end the day strong. Euro is essentially neutral, but I would expect euro to enter and end the day strong because of the anti-dollar, right? So I don't really, I don't get your trade. So you might see something, but to me, it's probably a mirage. So I don't understand the basis of your trade. Okay. So like Kiwi yen or Kiwi Swissy makes sense. Aussie Swissy makes sense. Okay. Check it out, y'all. Okay. We are supposed to go to 70. The entry was 66. Okay. We got to, this is right. The upward move is going to stop today. So the next one is, are we going to pick it up here? What do you guys think of this? Huh? Aussie Swissy? What do you stink? Cool. All right. Well, thank you for being here today. I want to thank you for the patience you're going to give me tomorrow and Friday while I'm on the road. Okay. Last time I was at the Harvard Club, they had high-speed internet access, but no uploads. So I'm going to be ready to hotspot with my phone. I hope I have cellular service. I might try to skip all that pain and suffering and see if I can get an office somewhere like Wall Street in my virtual office out there. We'll see. I'll do my best. I will be doing the swing trading group tomorrow at 2 p.m. Again, assuming that I have high-speed internet access to be able to stream. Okay. And that's that. It should all work out. So I have a very busy today. I have a very busy tomorrow. And I have a very busy Friday. But Friday ends with a group of FX boot campers getting together for hors d'oeuvres or snacks, more like snacks, right? Bar food, fancy bar food, and a couple of cocktails. And then we'll probably head off. I have reservations at the Carnegie Club for more cocktails and cigars if you ever want to hang out with Dwayne and have a stogie. Last time we went, several people had their first cigar, and it was a great day. So thank you for being you. Peace on earth. May the pips be with you. May your profits be above average. Please visit Trader's Way and open up a demo account, huh? It doesn't cost you money, but there is a cost to being here today. Cheers.